Well, I think we're going to go ahead and get started. I think we're all set up here and everything looks like it's running. I got it shared on the coalition's Facebook page. So without further ado, I think we will get started. Welcome to our second week of Munch on This, which is our virtual series that we are hosting, the Grazing Lands Coalition is hosting, basically to replace what would have been our mentor guided workshop back in October. Just a couple of things I want to cover is if you could go to the upper right hand corner of your screen, there are 3 dots. And if you could rename yourself so that we're able to get a head count of people tonight and some names for contacts if we need them. Joining me this evening again is Jay Fear. He's going to be our moderator this evening, and I'm so glad that you decided to join me again. Thank you. I appreciate it. Jay has a passion for soil health and for teaching and sharing with others, and we greatly appreciate that. And he continues to work with the Minokan Farm, monitoring plants and animals and soils, so we're super excited to have him back. We wish that we would be doing this in person, but I also think this is a great way to reach out to people that we normally wouldn't have been able to reach out to. So when one door closes, another one opens. That's the way I look at it. And let's see here, a couple other things. If you'd keep yourself on mute, we will have a question and answer session at the end. And this is being recorded. So if you have to step away and aren't able to get the whole thing in tonight, it'll be posted on the Grazing Land Coalition Facebook page, on the YouTube channel, and the website. So without further ado, I guess I could introduce myself. For those of you that don't know me, I'm Trish Faring, the field representative and grazing specialist for the Grazing Lands Coalition. My husband and I ranch north of Beach, and I'm very proud to be working for the coalition. So without further ado, I'm going to turn it over to Jay.
Okay, good evening. And thank you to Trish and the Grazing Coalition. And I'm very happy to be here. Didn't take a lot of convincing. It's something that I would enjoy, and I think it's an important topic as well. And so I think this gives us an opportunity to listen to the panel, and I think it helps us understand the part that the ag lender plays in terms of the bigger picture in agriculture. And so this is a pretty good opportunity to do this. So this evening we're going to continue with the Munch on This, and this will be the ag lender panel. And we're going to have Dakota Community Bank, Farm Credit Services, and Starion Bank. And the ag lenders are a very important part of this whole puzzle. And so I think over the years, whenever at work through USDA, if we had any outreach going on, we always wanted to make sure that the banker entity was included. And I think that helps us all kind of move toward a bit of a more central goal, if you will. So this evening, we're going to start out with Don Morgan with Starion Financial. And Don is president of Starion Bank and enjoys helping farmers, ranchers, and business owners solve financial problems. Father of 4, and having grown up ranching and rodeoing throughout the upper Midwest, Don enjoys roping, hunting, fishing, and the occasional ranch project. He learned holistic ag management from his father-in-law, Jerry Doan of the Blackleg Ranch, and has long been a proponent of the industry. He is married to Shanda Morgan, owner of the boutique store branded Envy. Don and Shanda now spend most of their time chasing their 4 kids through the junior high, high school, and Little Britches Rodeo Association. So this evening, if you would, we're going to give a virtual welcome to Don. So Don, if you would, we're going to turn it over to you next.
Well, that sounds good. Thank you for the introduction, Jay, and good evening, everybody. I'm very happy and pleased to join you all this evening and just share some thoughts from a banker's perspective. So really looking forward to this, the other presentations, and a good Q&A here at the end. So, you know, every time I speak to a group of farmers, ranchers, or business people, I tend to stay on the same theme or topic. And for guys like Jay who've heard me before, I know I begin to sound like a broken record, and some of that's intentional on my part. I really do it because I want each of my presentations to be as meaningful and impactful to the audience as they can be. And This one stays the same because it continues to be the single largest contributing factor I see to either the wild success of a farm, ranch, or business, and it doesn't matter which one. This really kind of runs across the spectrum, whether you're in agricultural or even if you're not. Or it's the largest contributing factor to the failure of that same farm, ranch, or business. So I think it's important to talk about it. And it's captured by the simple heading of mindset matters. Your mindset matters. Whether you own a farm, a ranch, or a business, this common thing always tends to emerge as the most important driving point. You know, the mindset of the owner is the key driver behind why the farm, ranch, or business exists. It sets the strategic direction and the related strategies and how effective they are or how effective they are not. It leads to success or failure overall. It drives the numbers. Typically, the numbers don't drive it. And it really just has a profound impact on how and why and what type of key critical decisions are made for that operation throughout the operating years. You know, I've been banking for 20 years, as Jay mentioned, and I've helped farms, ranches, and business owners from when they start up through when they're growing, when they mature and try not to decline, when they're making major operational changes, times when they're having wild success, and yes, even when they're exiting the industry, and that's exiting either through their choice or not. And I'm here to tell you that, you know, nearly 100% of the time, it is the mindset of that owner that generally determines how any farm, ranch, or business performs throughout all these stages of its life cycle. It truly is. You know, as an owner, there's a lot of questions like around that mindset, around, do you know why you're in business? Have you clearly defined and written down what you want to accomplish? Have you taken the time to figure out why you want to accomplish those things? And have you challenged yourself and been honest with yourself about your why and been real about it? Have you tested your goals for your operation against the question of, do they make sense and do they line up with the why that you've identified? And are your goals geared toward profitability and your quality of life? Or are you trying to keep up with the Joneses, as they say? Or are you trying to get big, make your operation bigger and just grow it bigger just for the sake of getting bigger? Or are you just reacting to events as they unfold around you year after year? Or are you trying to possibly carry on a legacy that you know is costing you your real life goals and ambitions? And once you've answered all of those questions to your satisfaction, then are you continually assessing the health and vitality and profitability and growth and direction of your operation or business against those answers? Are you making the tough calls and adjustments when you need to? And overall, are you focused on the right things for your farm, ranch, or business? Those things that all geared toward fulfilling you and your operation, again, on your why. It really goes back to that. Now, I don't intend to leave you here with nothing but questions. I do have some common recommendations that I've come up with that I just, you know, I have seen in my experience, these lead to much more success than not. You know, the best here, they know absolutely why they're in business and they're ready to explain it concisely whenever asked. They can answer that at the drop of a hat. You know, the best have also married their why intricately into their operation, and they ensure that it all remains pointed towards that profitability, sustainability, and fulfilling for all involved. You know, ultimately, that profitability ensures that sustainability and ultimately fulfills on the longevity of the operation and the quality of life of the operator. You know, the best at this, they write this all down. They take the time to do it, and they measure all those tough business decisions that we all have to make throughout the year, that owner has to make throughout the year. They're always measuring those decisions against that to ensure they aren't going left when maybe they should be going right. You know, the best at this then look continually at every aspect of their operation, and I mean every aspect of their operation, to ensure it's aligned to that why, that it's at its most effective from a productivity standpoint, and that it isn't taking away from or deterring the operation from really accomplishing those core goals, that core why. And the best are nearly fanatical at ensuring that all of the complex moving parts, they all stay aligned and they all stay pointed in the same direction. Now, I don't want to leave you with, you know, these from a hypothetical standpoint. So want to take an opportunity to give you a little more concrete example. You know, our bank, Starion Bank, it's really no different from any type of other farm, ranch, or business. You know, we face the same risks, the same business risks, the same tough business decisions. We have to answer a lot of these same questions. So just to give you a good concrete example, here's how we've answered them at Starion Bank. So our why, you know, we are here to be leaders in financial innovation for our customers in a really complex world that's changing very quickly. We're here to be very safe and sound in an increasingly risky world. We're here to be financial advisors for our clients and find solutions for their needs. And we're here to always be supporters of the communities that we live and work in. And this is our why. This is what we're passionate about. This is why we exist, why we get up in the morning, what fulfills us, what we reward ourselves when we accomplish it, and where we have to hold ourselves accountable when we don't completely fulfill on it. And there are times we don't completely fulfill on it. And notice that our why, it isn't really to beat or keep up with our competition. It isn't really to reach a certain size. It isn't to become, you know, extremely rich or to carry on some legacy. It's personal, it's powerful, and it's important to us. And I hope you can hear the authenticity in my voice here that, you know, when I speak to that why, it's truly believed. And we've woven this throughout our bank, and our staff believe in it, and our systems support it. And yes, it is geared toward sustainable profitability. And that is because that baseline profitability is the sustaining factor that allows farms and ranches and businesses to accomplish that why. And yeah, we've written it down and we measure ourselves against it, and we're really fanatical about sticking to it. I don't say all that to just give you a pitch here about Starion Bank. I just want to give a concrete example of how this applies, this concept of mindset of the owner matters, no matter what your business operation is, whether it's a farm, ranch, or in any other industry. So I'm going to sum it up and just leave you with this. I strongly recommend that as owners and operators, if you haven't, go home and sit down and ask yourself why you're in business. And be very brutally honest with yourselves. Focus on what you're passionate about, what fulfills your soul, you know, what you're sure that you would get up every morning happily for. Write it down, set it aside, come back to it later. Change it as needed. Do this hard work to get to this point. Then once you've done that, then start looking at every piece of your operation or your business or your farm or your ranch and ask, does this part of my operation contribute to or take away from what I wrote down as my why? And then the tough part, the really tough part is if a piece doesn't, get real, really real, and start planning to either change it, move it, or get rid of it. Either get it moving in the right direction or get it out of your operation. If it does fit, give it more time, love, and resources. Grow it. Because that's what's fulfilling to you and what's going to fulfill in your operation, and that passion is going to carry that forward. Be fanatical about this, about marrying every part of your operation to fulfill on that original why. I guarantee you this is going to make a difference in your operation. Done right, it'll make you more profitable, more sustainable, more fulfilled, and possibly more full of joy, which is really what we're all after. So that's it for me, a very simple message. It becomes extremely complex in its execution, but just based on my history of dealing with farms, ranches, business operations through many, many years, it is really what I continue to walk away with as, if I'm going to give a presentation, I'm going to focus on that because I just see it as being the most single largest contributing factor to success. It's not easy. You would think it's simple, but it's really not. And you'd be surprised at how many farms and ranches and businesses don't do this, and they suffer for it. So, and you will be surprised at the profound impact it can have. So thank you, everybody, for listening to me tonight, and I'm going to pause there, and we'll see you in the Q&A session. Thank you.
Had to remind myself to unmute myself. Okay. Well, we appreciate it, Don, and you get us off to a good start. And I think we are just going to go forward with our next speaker, and we'll be gathering up the questions that come in. I think Trish has been gathering them up as they've been occurring, and we'll have the Q&A at the end collectively for all three. So appreciate it, Don Morgan. So our next speaker on the egg panel is Sam Arndorfer, and he has been with Farm Credit Services of Mandan for 13 years and is presently serving as Assistant Vice President. Sam graduated from NDSU with a degree in Agricultural System Management and has worked in several capacities of agribusiness during his career, including credit, insurance, and sales. In addition, he grew up on a farm and ranch in southwest North Dakota and continues to raise cattle. Being active in both lending and production ag gave Sam a unique understanding of the challenges farmers and ranchers face on a daily basis. Sam and his wife Brooke have 3 children and enjoy youth rodeo, hunting, and spending time at the ranch. So a virtual welcome to you also, Sam. Really appreciate you being here this evening to be on the panel. And with that, we're going to turn it over to you also. So thank you.
Thank you, and thank you for inviting me to this wonderful, wonderful Zoom meeting. Unfortunately, it's not in person because I do enjoy being in person and shaking people's hands, and I'm missing it after 8, 9, 10 months of not shaking somebody's hand. But you know, Don makes a great point, and I'm going to probably just piggyback off of it. And you know, once you have that mindset and that passion and that why, I guess I'm going to take the next step of, you know, I've been in lending for 13 years and I have my book of success. Through my years, I've just asked questions to the most successful farmers and ranchers that I've dealt with. And one thing that I found is the highly successful ones have that passion, have that why are they doing it? And they also all excel in the 3 different facets of management. You know, when I started talking about 3 facets of management, I started thinking about production management, financial management, and marketing management. And I would imagine that many of you would have a grandpa that probably was the hardest working man you know and was fairly successful. He maybe wasn't the greatest financial manager or the greatest marketer, and he was still successful. And in maybe your dad's generation, you know, he was able to be successful being good at 2 of those facets. Maybe he was good at marketing and good at production. But in today's world, what I am noticing is the best of the best are good at all 3. And if they're not good at all 3, they find a way to become good at all 3. Either through a network like this, you know, this is great. There, I mean, you have mentorship, you have all these different types of network that you can find all across. So now I kind of want to dive into each one of those, you know, your production, your financial, and your marketing management. And when you start thinking about it, you know, production management anymore isn't just growing a 800-pound calf by November. Well, you kind of have to rethink absolutely everything anymore. And you look at the holistic approach, you look at how successful different ranchers and farmers can look. You don't have to fit into a mold to be extremely successful. What you do have to do is find what works for you. And that's where you fall back onto Don of why am I here? What am I passionate about? Is it soil health? Is it cattle? Is it what is it that drives you? And then take that back into your production model. You know, so when you start thinking about production, you start thinking about, you know, your grass management, your livestock management, your politically management. I mean, obviously, hey, we are a small industry anymore. I know a lot of farmers and ranchers, and we are all important. We can't fight each other anymore. We have to work together to make sure we're moving the agenda that we need forward. Moving on, you know, your soil management and how can you become more productive with the same amount of acres. I often see way too many times people come and they need to get bigger. I need to get bigger. Well, getting bigger isn't going to get you better. You got to get better before you get bigger. And then, you know, like Don said, you have to set those long-term and short-term goals. Without having a long and short-term goal, you really don't know where you're going. Our business is no different than Starion. We have our vision, we have our mission. You know, we're here to make a positive impact on rural communities. That's been the same for 100 and some years. So having those long and short-term goals to work towards. And honestly, hey, if production management isn't your thing, maybe your thing is the financial and the marketing management, and I'll move into those. But guess what? We are in an age right now that you can find people to help you with any aspect of management. I'm looking at Jay right now, probably one of the best production helpers of grasslands that's out there. So you go and you find and build that network of wherever you need the help. You know, the financial side of it, it used to be kind of, you sold your calves, you brought your check in, you paid off your operating, you got a new one and went on. Well, that isn't necessarily how it works anymore. A guy has to step back and look at every single thing you're doing. Just like Don said, look at every single thing you're doing. You start applying a lean approach to every action that you have, and really diving into it of, why am I doing this? What is it? What is its success? And measuring that. That's really what the financial side of it is. It isn't just because bankers want your financials. Your financial side of it is really how you can measure what you're doing. Otherwise, it's very difficult to measure. You have to have a goal and you have to have a way to measure that goal. And the financial side of it is how you measure those goals. So, I mean, you take another item on the financial side, and I may offend some people, but there was a time where farming and ranching was maybe more of an entitlement mind. My grandpa did it, I did it, I get to do it. You know, my dad did it, I get to do it. Well, it is not anymore. You have to operate it as a business. You have to change your mindset to say, you know what, I need to change my mindset to be a risk manager. I need to and production manager and profitability attitude, not an entitlement attitude. And the most successful that I see take and turn that and say, okay, this is how I'm going to move forward. And lastly is marketing. We have to start utilizing the tools that are available to us. Far too often we leave the tools to market on the table, and those tools are there to help you, be it livestock risk protection, be it the futures market, just straight hedging, puts, options, finding somebody that can help you understand that marketing. You can pick up thousands and thousands and thousands of dollars if you're truly hedging and you have the product and you understand what you're doing, and putting floors underneath, be it with LRP. LRP right now, to me, with the new rules of LRP, is a great option. You can do unborn calves and market them, put a floor under them for the fall. It's a wonderful tool, but the marketing side of it is so important. You know, just selling on the third week of October maybe isn't always the greatest idea anymore. Maybe you got to start looking at, okay, that market isn't working for me. Maybe I need to move my calving around to hit those better markets, to say, hey, do you want to try to get those calves to kill in April, or do you know that's a lost cause? Well, if it's a lost cause, then why are you calving in March? Or, you know, and just really readdress any and everything that you're doing to say, how can I make this easier and make more money? And still enjoy what I'm doing, and doing it for that passion, doing it for that why, like Don said. So I don't have near as much as Don had. You know, I was really hoping for more of a question and answer type of deal. You know, the biggest advice I would give you is focus on those three aspects of management, and find a network, find those mentors that help you. Sometimes they're neighbors, sometimes they're family, and sometimes the wonderful, wonderful part of the internet is maybe they're thousands of miles away. Maybe you don't want your neighbor to be your mentor, because guess what? Sooner or later, you're going to butt heads over some rental or something. And maybe you want to bounce things off of of a peer group. Find those peer groups, there's lots of offerings of peer groups of saying, hey, what are you guys doing down south? What are you guys doing in Kansas? What are, finding what might be working for others and bringing that into your operation. And then obviously, hey, I said it once, but agriculture is not a competition with anybody anymore besides yourself. And you can't be fighting between agriculture. We're too small. We need every bit of it. Be it holistic, be it organic, be it traditional. We need all agriculture to feed America and to feed the world. And there's niche markets for all of them. So, with that, I don't have a whole lot more to add. I'd love to answer any questions, be it now or at the end.
Okay, we appreciate that, Sam. We'll probably take those at the end. I know Trish has been accumulating them. And so when we get to the end, we're definitely going to do some round the table type chances to answer each of those questions. So that part will definitely be coming. And we appreciate your breaking it down as you did. And I think that brings us a whole nother picture into focus. So we thank you for that. And our third speaker this evening is going to be Jeff Blees with Dakota Community Bank and Trust. And Jeff is a vice president of Dakota Community Bank here in Bismarck. He works a portfolio of ag and commercial business loans across North Dakota, South Dakota, and Montana. And he's worked for Dakota Community Bank and Trust for 15 years and has been employed in lending for a total of 29 years. So there's a pretty good run. And I think that says something, Jeff. You hung in there, right?
Just
So
pour out.
yeah. So he and his family own and operate a fourth generation cow-calf operation in Southwest and Central North Dakota, and they sell bred females. And they've been following entities such as Burleigh County Soil Conservation District for the past 20 to 25 years, and the North Dakota Grazing Lands Coalition for the past 5 to 10 years, trying to learn as much as possible about new ways of managing the grass, fencing, handling of livestock, herdmanship, cattle selection, livestock, complementary crops, and soil health in order to improve our overall operations. They are eager to hear what new knowledge they may gain from this conference series and sharing of these ideas. So with that, Jeff, we're going to turn it over to you if you would, and we appreciate you being here.
All righty. Thank you, Jay. And thank you guys for asking me to be on the panel tonight with Sam and Don. It's an honor to get a chance to be part of this group. Kind of being the old dog in the park here, I guess. I hear Sam and Don's talks. They've covered a lot of things, and a lot of things are absolutely right on. The competition is certainly at the highest level anymore. We can't afford to miss on any of the marketing, the management, the financial management, the production, everything we got to be sharp on. Kind of brings into the daily view of a lot of tension, a lot of stress because we're so afraid to fail or to have a slip. I'm kind of getting to the age now where I'm starting to look for the days that I can just breathe and rest a little bit. And thank goodness I've got 3 family members, 3 kids that are interested in the operation. Got the support of my wife and my mom still to get up every day and try anyway. Kids have got the energy now, and I'm looking for ways to just kind of be there and give a little advice once in a while. And when I get out of the office and have a little energy left over, to go out and help them with it a little bit. But as Jay said, I've been with Dakota Community Bank 15 years and 29 overall in lending. I was with Wells Fargo and started with Farm Credit Services before Sam got there, I guess. So that really shows me to be an old dog when the existing guys weren't even there when I was there. But before coming into lending, I was outside of the state working for Archer Daniels Midland Company as an elevator manager trainee, and in Sullivan, Illinois, and Copeland, Kansas. So I've gotten a chance to see agriculture in a couple of different areas of central US and interesting, to gain that knowledge, come back to North Dakota and get a chance to appreciate what we got back here and maybe bring some more ideas back into our own family operation, as well as to share with some of the customers. Probably most proud, I guess, as a guy gets older and see how the world changes. Most proud to be able to say this year is going to be our 30th year of marriage. My wonderful wife Chris and our kids have certainly provided a lot of fun for me over this time, and had the love and support of my mom and dad to join the operation, and so I continue to try to learn and try to pass on some knowledge to the kids as we move along. I know I'm asked to be on the lender side of it and provide information on the lending side, and I got to tell you, my passion has always been being in production agriculture. I absolutely love the days, the weekends when they come and I can be out with the cattle the whole time, trying out some of these new things that we've learned by following Jay Fear, the mentor of mentors. I just can't say enough about Jay and the group at Burley County Soil Conservation District. The young innovators back then, back in, I think it was early 90s, the Marlon Richters, the Gabe Browns, Troy Vollmer, Glenn Brown, or Bauer, so many guys, Daryl Oswald, everybody willing to try something new, something that everybody else in production agriculture standing around watching was saying, what in the world are these guys doing? I'd go home and talk to my dad about the cover crops that they were trying and explain, oh, it's this multi-species and whatnot. And Dad would just sit there and frown and stare at me and say, you're telling me you're going to plant a bunch of weeds in my fields? You go from a clean single crop field to a multi-species crop. And it was always interesting to gain the knowledge of the new ideas that they were bringing forward and to take them back and try them with my dad. And, he was wonderful. He was a tremendous mentor as well. He would listen. He would tell you his thoughts, and then he would always tell me, you're free to go ahead and try it. You're free to do it however you want. If you think that's the way to run it, go ahead and run it, but do it on your dollar, do it on your land or your operation, and I'll be here to watch. You can prove me wrong. And he had enough German in him, like me and several others. It's pretty hard to admit when we're wrong and to say sorry. And luckily, our wives are always there to jab us and make sure to teach us. We got to admit when we're wrong, and certainly my kids come around and make sure to jab me and show me when they're right and my ideas are wrong. So it's been great to have such a great bunch of mentors and a great group of innovators. Grazing Land Coalition, as I started following them, Josh Dukart, John Lee and Chad and Ace and Gene Govan, everybody that's so willing to try new things and then share those new things, admit the things that worked or the things that didn't work. In our operation, we've gone back and forth trying these different things that somebody else is doing and it's working in their operation. I will be the first one to tell you that I can go back to our operation. I can come home from a seminar or from a field day and think, holy buckets, I got to figure out a way to make this work, because it certainly looks like it's working in the operation we were just in. There's times that you'll go back to your operation and maybe one of those 10 things or two of those 10 things, maybe it's 4 of those 10 things that you learned or saw at that meeting or seminar just can't work on your operation or that piece of your operation today. Don't count it out. Don't throw it away that it's not going to work. But on that piece of ground or around that day, maybe it can't work. I've got some little pastures, say like 100-acre pasture. How much money can you invest in putting pipelines and drilling wells and doing a bunch of cross fencing, maybe you can't invest that many dollars and get enough return on that small acreage. But keeping your mindset open to the change, I can go back onto another piece of my ground, find a pasture that's got some size to it, and all of a sudden start looking at a $5,000 well with some pipeline is going to add a lot of value down the road for me. And it gets to be pretty easy to figure out a way to finance that, or to talk to a lender, or sometimes that lender is my wife. Got to ask her for permission to take some money out to spend on that new idea. But to do cross fencing, the innovation, Kenny Miller with his cross fencing, and his different systems that he's got set up there to learn how to run the poly wire in some pigtails, or even some white poly posts, whatever step-in posts that you got to have that's quick and easy. It doesn't cost that much to get a little cross fencing in, even 100-acre pasture with a dugout in it. You can cross fence that up and go from anywhere from an increase of 10 yearlings on that to 25, 30 yearlings on that 10 or 100-acre patch. Didn't seem possible when I started on that rented ground. It's real. It's happening now. It's exciting to watch. It's exciting to see the improvements that adding these new programs, new ideas have done, and then to see how it impacts us positively on the net profit side. It used to be when I went to college, the only thing that NDSU wanted to tell us or send us away with was, increasing production. It was bigger calves. It was more production per acre at any cost. They never talked to you about the net profit. Well, everybody knows back in the 70s and early 80s, if you weren't focused on some net profit, the inflation and the high interest rate ate us up. We could outproduce ourselves to the point of financial failure. And we didn't think about it. We didn't think about the expense of having that iron or machinery around to help us get over more acres, or to do it quicker, to have, like spending all kinds of money on any kind of feed source you could to generate a 650 pound calf back in the 80s. It was just bragging rights at the restaurant. Once you're out of business, you don't have very many bragging rights left at the coffee shop. So we've darn sure came full circle. We've entered into the late 90s and went into the 2000s, and people finally started thinking about net profit. Unfortunately, a lot of it was still the pressure or the enticement to get bigger acres, bigger cow herds. And part of it was driven by what we could see our costs being. Ultimately, you can look at a cow-calf operation, and if you put value to everything that you do, producing feed, renting pasture, anything there, buying the bulls, the salt mineral, if you put value to it and you look at what you could pay somebody to custom do it for you, there honestly is not even $100 bill left per calf in a cow-calf operation. So if you quickly take that scenario and you look at a family insurance cost being $26,000 a family, and you look at, say, $2,000 a month more family living cost, all of a sudden you're to a $50,000 family living cost. And if a cow can only generate $100, you got to run 500 cows. Looking back to where we were in the 80s, to have 500 cows, and we used to have 100, that means you got to swallow 4 of your neighbors. All of a sudden we got a neighborhood that doesn't have very many people in it as we try to be profitable. I think that the society encouraged that. We thought that's the way to run, and there's still people doing that. I think there's other people that have watched that and seen operations get big enough. They don't have time to spend with their family. They don't have time to go on a little family vacation or enjoy the day. You know, it gets to be a little harder in the spring to go walk through the pasture, see the new spring flowers that are popping up. You don't have time if you get so large. And so I think the new wave of producers is coming in, and they're looking at regeneration or regenerative agriculture. They're looking at family life and getting the whole family involved. They're looking at enjoying every day, and looking for more net profit per acre or per head so that they don't have to be as big. If that means we got to have more head count on the acreage, therefore our acreage has got to, our soil's got to be healthier. It's got to produce more grass. We got to be able to sustain more cows per acre, which might mean bringing our cow size down. Maybe we don't have to have 16 to 1800 pound cows. Maybe we need those 900 to 1200 pound cows. We can come off possibly with more net profit. It's always up for argument or discussion which way fits our operation better. But through the following of Burley County Soil Conservation District and North Dakota Grazing Land Coalition, it's been very eye-opening to see these operations, hear everybody's successes or failures, hear what works for their operation. Just gives a great insight to be able to go back and talk to customers about what might work for them in the future, or what could they do when they ask, what can I do to change my operation, to just start sharing some thoughts. It used to be in the 90s, the 80s and 90s, the answer was when you couldn't cash flow, well, somebody needs to go to town and get a job. Maybe that's kind of where I started, was there wasn't enough room for me on the farm, so I had to go to town and get a job. I've been working all my life to find a way to get back to where I got a full-time job on the farm and don't have to work in town. So back in the 90s, I started talking to some of my customers just about, instead of going to town to find an off-farm job, create an on-farm job so the whole family can stay home and work together. That might be, back then, it was simply adding like sheep to the operation, letting them graze the shelter belts, the farmyards that weren't getting used anyway. Maybe 200 ewes back then was able to generate enough gross income to equal an in-town job for that person that would leave. All of a sudden you're working back on the farm. You do have a different enterprise there. Maybe it wasn't one that you wanted to have to claim to be involved in, but it put the family back on the farm, and it put both husband and wife working together again. Maybe in today's environment, it's custom feeding somebody's calves or a cattle buyer's calves, or maybe it's custom grazing somebody's cow herd in the summertime. Maybe it's custom wintering and calving cows. They go away come June. You don't have to have additional pasture for them, but because you were able to generate enough feed, maybe your operation generates a lot of feed, you can go ahead and feed them or winter graze them, calve them out and return them to somebody that has the lack of facilities or labor to calve out the number of cows they have. So looking for opportunities to generate money on your existing operation in order to maximize the value of your equipment, or maybe it's even just getting to fully utilize the labor. If you want your family there, creating more jobs that use up their labor too, so that you have more net profit. Maybe it's simply the multi-species or enterprise deal, having the chickens, the sheep, the hogs. Maybe we don't have to do it in full confinement. Then we don't have to have quite as much labor and still have the chance of profitability from some other enterprises. Maybe it's agritourism, maybe it's agri-entertainment, providing some kind of additional income to come off of the operation is great. And I remember being out at at Jerry Doan's for one of the seminars that we were on. And Jerry, I hope I don't misquote this too terribly bad, but as I recall, Jerry shared that kids that wanted to come back to the farm, the one thing that you need to challenge them to is to create a job on the farm that justifies the wage they want to pull away or the family living that they want to pull away. And I think that's a great way to challenge them so that they don't take the operation down. It brings a lot of creativity back to the operation, I believe, as well. I think the biggest way that we need to go about making change is we need to make a list of can't do's, which is only is going to be the things that religiously, ethically, or lawfully you're unwilling to do. And then go over to the other side and write down the won't do's. The won't do's are the ones that you didn't want to be known as doing. If it was running chickens, if it was having anything other than a black cow on the place, if it's a field of weeds or multi-species cover crops, or no electric fence in my big native prairie, that's just a spider web on my pasture. Write those things down and then challenge yourself to ask, why can't I? The ones that are the can't do's, the ethical, the lawful, the religious, you'll never touch them. You don't want to touch them. But the won't do's because, oh, society wise, I don't want to be known as that. You need to challenge yourself. Why? Because you can do those to change your operation, to improve the profitability of your operation, and maybe most of all, improve your family life together, your family happiness, and the amount of time you get to spend with your family. Realize that it's okay not to drive a new pickup, a new tractor. Maybe it's okay not to have fancy stitched jeans or a new house. My mom always told me that. My mom and dad lived it in front of me. And I'll always thank them for that, showing me that it's okay to be different. It's okay to do your own thing if it fits for you. You know, you talk about the lending side of it. I'm supposed to be talking about that, I guess. Banks are simply a sales or service business. It's not something that you're supposed to be afraid of. I grew up not knowing lenders, kind of being afraid of them. They always held our future in their hands. If they said no, we were in trouble. But a bank is simply a service or sales oriented business. They're simply renting you their money, and the interest that you pay is your rent on that money. They don't want to foreclose on you. They would rather have their money back than you have to give them your land or your cattle or your machinery, whatever. They don't want that. They want to see you be successful. And that loan officer, he's just your medium between you and that rented money from the bank. He wants to be your partner. He wants to work with you. He wants to help you achieve your goals. I'm saying he, but I mean he and she, because we got a lot of talented female loan officers and people that are involved in the banks that are very, very knowledgeable and have good ag background. I think our biggest challenge in agriculture and agricultural lending right now, when I got in back in the early 90s, 38% of America's ag lenders and bankers had an ag background. Well, it's almost 30 years gone by. How small a number do you think that is? I don't know the number, but I'm going to guess it's somewhere between 6 and 9. So our challenge in agriculture is to try to find somebody that even understands what we're talking about or cares. They might be just people looking at numbers. And so when we try to tell them what our envisionment of how to change our operation to make it more profitable, it might be too far out there for them to understand. So finding a ag background loan officer is a great partner to have in your operation. got pretty long-winded already. Certainly I'm interested and available for questions or calls or whatever we're going to have here, but thank you guys again for asking me to be a part of the presentation.
Thank you, Jeff. Appreciate your insight. Lot of experience. And we thank you for that. And Trish, you probably have received a question or two.
I sure have.
Okay.
I know I made a lot of notes myself too. So
As did
the first question that I have is, what's the biggest or most common financial mistake you have seen your customers make?
So we're probably just going to ask each of you that. And Sam, maybe we would, if it's all right with you, if you want to unmute, we'd probably start with you on that question, Sam. And then we'll go to Jeff and Don if he's back.
Could you repeat that, Tricia? What's the biggest, what's that?
The most common financial mistake you have seen your customers make.
Oh, man, there's all sorts of different financial mistakes that you can make. But I struggle to really just pick one. I would say one of the major one is doing it because that's how we've always done it. And even though that's failing, and we can show a trend of that failing, you know, losing year over year over year, but yet continuing to do it because that's how we've always done it. I would say that's the biggest one that I can think of right now.
Okay. Jeff, you want to add to that, please?
Yeah, he's right there. The other one is trying to keep up with the Joneses. You know, some people can afford brand new equipment. Some people can afford brand new houses. In agriculture, there's many times that just simply doesn't fit. So the big thing is, or the big encouragement is to be comfortable who you are and what your operation can do or can afford. If you're comfortable with that, just be comfortable knowing that's good enough as long as you're happy and you're profitable.
Very good. Don, are you back on?
I am, and I echo Sam and Jeff. They're spot on. It's not, that pattern of failure that, next year's going to be different, but you don't change anything. Definitely the biggest, keeping up with the Joneses. The third one I'd add would be, getting bigger for the sake of getting bigger. And Jeff spoke to that very eloquently and is spot on that it's got to be about profitability. And a lot of times, we don't focus on that. We need to. So.
Very good. Very good. Trish, I think we're ready for another question.
Okay. Curious what opportunities, if any, do you see in the ecosystem services markets, an example such as soil carbon and water quality?
Okay, if we can kind of start in the same, Sam, maybe you'd kick us off again. We're going to have yep, there you go.
Yeah, that's a little outside of my wheelhouse, but I see it as a major, especially with the newest administration and the Green New Deal, so to speak. I think finding ways, the biggest thing is it's probably going to be doing exactly what we're doing. We just have to find a way to quantify it. And I think that's going to be the biggest thing, is finding a way to quantify what it is that we're doing for the economy, or not the economy, but the environment, because it's huge. I mean, so finding that way to quantify it and getting that support from those that don't understand.
Very good. Jeff, we're going to have, there you go.
Yeah, he's right. Whether you like the new administration coming in or not, they're talking about the focus on green, and seeing Biden already grab a hold, or trying to grab a hold of the third round CFAP payments, and wants to take them toward his conservation efforts or his thoughts. Whether you agree or not with him grabbing those CFAP payments, for most of this group that's looking to do different things that are regenerative, are conservation minded, it's probably going to be a change. If he takes those dollars, it will be a change that possibly will give you opportunity, may well give you additional funding to make some of those changes in your operation. The big thing there too, kind of what Sam's saying is, we got to tell our story. If everybody wants conservation, if they want to focus on conservation and green and doing all these things, think about all the things that we're doing in agriculture that already do that. If you're trying to be conservation minded, you're probably trying to save money. You're probably not shoving all of the purchased product into the soil. You're trying to make the soil healthy. You're trying to make the soil be able to do everything that you want, whether it's grow grass or grow crops. And to be able to tell that story of everything that we're doing, I don't think the public has a clue how many things we do in a day to try to save, if you will, the planet, because it makes everything we're doing in agriculture that much more affordable, that much more profitable, and that much more enjoyable.
Very good, Jeff. Don?
I can't add much more. I think those guys covered it. I think it's the reality of our future, and I think it's a very savvy, forward-looking question to be considering that and how to get ahead of that curve. So I think it's spot on.
Very good. Very good. Trish?
This is a two-part question. What specific financial advice do you have for young people that own nothing? Actually, it's a three-part question. Where should they start spending the little money that they do have? And what other realistic expectations they should have? That's a great question.
Sam, could we kick off with you again on that one?
I don't know if this is fair anymore.
Oh, I think it is.
No.
I think Jeff and Don have told me they think it's really working well.
You know,
It is. Keep it up.
It is, yeah.
young people that have nothing, you know, I guess I would say be realistic and focus on income producing assets. Don't focus on pickups and tractors. Focus on cattle that are going to make and make income. I see too many young producers need a new pickup. You don't need a new pickup. An old pickup will still drive you to town. So, you know, so that's where I would say focus on your income producing assets when you do start expansion. And then be realistic, know where you're at, know who you are, know that, hey, if this is truly my passion and truly why I want to be here, there's sacrifice that goes along with it. And if you're not willing to make the sacrifice, you need to go find something else to do. Because I guarantee you that at 20, there's going to be sacrifice, at 30, at 40, at 50, at 60, there's always sacrifice. But if it's something you're passionate about, you're willing to make that sacrifice.
Very good. Jeff?
You know, the joke always was that when we started farming, we had nothing, and when we were done, we still had the same thing. So I guess if you're coming in with nothing, feel happy. You got nothing to lose, basically, everything to gain. And you know, it's tough if you don't have a family member or know of somebody that's retiring out or looking to exit the industry within the next 10 or 20 years. So look for somebody that would be willing to mentor or guide you or help you get into the operation. Not only, you know, when you're young, you just want to grab something, take off and run it, do it, have it. Well, at the same time, I can only tell you, as much as there is to learn in agriculture, you really need a mentor or many mentors stand alongside you. So if you can find a family member that's willing to help you get into the operation, an older couple that would need some labor force, but will still be there present to teach you how they did it. Doesn't have to be how they're going to make you do it, but how they did it and why. You got something to learn from. Just like Sam's saying, you don't need a new pickup. You know, if you start, if you do it all with your own money and start with your own deal, maybe you can only afford 25 cows. Well, the last thing you need is a front wheel assist tractor to go feed 25 cows with. So if that means starting, there's still some international M's that are running with an old loader on it, but get something that's affordable for that size of operation that you can start. Certainly, if you're asking about where do you go to start financing when you have nothing, I'm probably going to be maybe too blunt to say go talk to FSA, but they're probably the operation that's going to finance literally close to 100% of your purchase price. Not many other lenders are willing to take that risk if you have no other person to guarantee the loan or provide collateral or help you get started. FSA might be your answer. I guess I would just tell you, look for somebody to be a mentor, somebody to help you get started. Real difficult to go find a farmstead, to buy a farmstead, to buy the cattle, buy the machinery, and find other land to run on at the same time. That's a really difficult task. So find a mentor to start with, I guess.
Very good. Don?
Yeah, I would echo that. You have nothing, but you do have your single greatest asset is your ability to gain knowledge, and start there, gain knowledge, and do whatever it takes to gain that knowledge. Just like Jeff said, grab that mentor. You have the ability, with that knowledge, then to become profitable over time and do whatever it takes to get by until you can get there. But knowledge is your single greatest asset that you have. Utilize it.
Very good. And Sam, this time we're going to go reverse, so you can kick back. And then I want you to use this opening line, Sam, when we get to you at the end. I want you to say something like, I echo what both Jeff and Don have said. So that'll give you a little, we'll even it out a little bit. So Trish, go ahead and kick us off with another question. We'll start with Don.
Well, the question is kind of a joke coming back in, but basically it goes back to what these guys have been talking about, keeping up with the Joneses. But how many dually pickups do I need to be profitable? So that was coming in from Pete Kronberg. He had to throw a good one in there. So the next question down the list is coming in from my living room or kitchen, one of the two, I'm not sure. But how do you recommend to keep the line of communication open between lenders and the farmers and ranchers?
Don, would you consider starting us out?
Sure. Yeah, I'm going to miss saying I echo Sam here. That's quite a change for me. I do want to answer that first question too. If you got Dodge dually pickups, you're going to be profitable. Anything else, probably not. But just have to slip that in there. I'm in all seriousness, I'm a real believer that your ag lender, your ag banking partner had better be having these conversations with you, these real conversations about your operation, and challenging you in those areas you need to be challenged on. And first things first, if you don't have that, find another ag bank or another ag lender. There are great ones out there. Jeff spoke to it in his presentation about, how strong of a mentorship that can be. That's one of your critical partnerships. Find the right one. Don't just stick to one because you've always, that has always been there. Find the right one that challenges you in that area. In terms of lines of communication, one thing in the banking industry that I see happening, and a lot of us are kind of just waking up to it and getting on the cutting edge of it, is this shift to holistic ag production, holistic ag management, a holistic look at ag operations that really starts getting real about, okay, what are the real assets of the operation? And the first and greatest asset of the operation is the soil. And that's a bit of a profound change. And so if you don't have a bank that's, open to that concept or open to being a part of that change in thinking, find a bank that is, because there's more and more of them out there. There's 3 banks on here tonight that obviously are open to that concept and see the real value in it. So find that right partner. And then the last piece is it's on us bankers to help the agricultural industry, work through this change, because it's really needed for the ag industry. I think Sam said it really well that, The ways of doing it the old way aren't working anymore, and they need to change, and they need to change rapidly. We all need to be good partners and move that forward together.
Jeff, would you consider next?
Yeah, I guess, Donnie, if it's Donnie, communication with the lender, all I can encourage you is try to talk to them as often as you can, as often as they have time to. I would like to tell you that it's the loan officer's job to spend time talking to you, but only ask you to understand it this way. You've got one loan officer to talk to and share your ideas and thoughts and whatnot with. That same loan officer might have 200 to 500 customers that he needs to spend time with too. So just understand that some days he's a little wore down. He or she may not have time to give you a call, but would enjoy hearing a call from you or a text from you, an email from you. Some of my most favorite customers that I absolutely enjoy being a part of their operation with is they will send me a text or an email or a quick call to tell me about the success they had that day or the new thing they tried. When we were out in the cabin barn this spring, I was sharing with the one guy that we had a cow that was just trying to kill her calf. She was just bunting it around and pushing it into the water barrel and doing whatever she could to get rid of it. And I had a customer share his ideas with me, and he just said, my wife has dealt with a couple of those cows. She just takes the calf out of the pen for 2 days, won't let that cow have any other association with any other cow, kind of like putting her in jail, won't let her smell her calf, nothing other than when it's time for that calf to suck. And then right back into the box stall. Well, the sharing of ideas there, I went immediately out and tried that on that cow. After 2 days, it was pretty much spot on that she was ready to get out of the box stall and start being around other cows. And when I put her in a group with a couple more cows and she saw they weren't beating their calves up, she was willing to take her calf, and away it went. So the sharing of ideas, the customers that call me and share their successes, whether it's even that their son or daughter just did real well in a wrestling match or a cross country meet, just the normal living things, and talking about maybe the new grazing plan that they've put into their operation, anything like that, just a quick shot of a text. Maybe it's calling and talking over the idea of, hey, Jeff, we got this opportunity to rent this additional half section. Maybe it's 1,000 acres. Is there any way you think we can start looking at a financing plan that we can get that into our operation and give our son, daughter an opportunity to get worked into the operation? I love that kind of dialogue. The more contact I have with my customers, the better. The other thing is getting the loan officer onto your place. That's huge. If you want them to understand you and you want them to understand what you're going through, what you're seeing, what you're trying to achieve, you need to get them on the place. And it's all too easy for us as loan officers to get bogged down in the computer work that we got to do for auditors or for management, to get bogged down in all of that and not justify the time to come out and see our customers. If you ever think a loan officer doesn't want to come out, you're absolutely wrong. We love every day in the country getting to walk on the soil, getting to see our customers, getting out of the office, not having that phone ring. So invite them out. We don't need a big show. Cup of coffee goes a long way for me. So get them out on your place, share your ideas, your thoughts, your goals, show them what you're trying to change. But the more contact you have with your loan officers, the better they'll understand what you're trying to do and where you're trying to go. So I just encourage as much contact as you can. That's great.
Okay, thanks, Jeff. Sam?
I don't agree with either of them. No. I do. Communicate early and often. Be realistic. You know, the lender needs you just as much as you need the lender. We don't have a job if you're not there. So if your lender is not a value add to your organization, you need to find a different lender. I really feel that wholeheartedly. Your lender should be a value add, and don't take what they tell you as a personal attack on you. If they're truly a value add and they're telling you something, don't take it as a personal attack. Numbers don't lie. They are what they are. Here's what they are. And just understand that, hey, your lender's telling you this because they want you to be successful and understand what's going on. I guess I took it more on the tough times more than just a regular lender approach.
Yep. Very good. Trish, you got another question for us?
Yeah, and I should add, there was a compliment at the beginning of that question that I forgot to pass along, and that was great job. So thank you. Let's see, the next question. Oops, I scrolled too far here. Okay, this is cutting to the chase. What percentage of ranchers can pay for land with what the land produces right now?
So Don, would you consider starting us out one more time?
Yeah, wow. Good question. I'm not sure I can answer that in any real intelligent way, than to say, I think the gist of the question is getting at land prices and you know, how can the operation support increased land prices, whether it's owned or rented, and especially if you've got debt on it. I think that's what the question's getting to. And so I'll just say this. I think with the price of inputs, the price of land, you know, just the overall inflationary cost increases on everything it takes to run an operation, that is really the impetus here that we're talking about to get fanatically profitable, and fanatic about profitability, slicing and dicing every piece of what you got, being real about the assets that you have. Are they mild, not productive, moderately productive, super productive? Can you move them up that ladder? If you can't, get them out, and be real about that. So that probably didn't answer that question, but it would be my best attempt at it.
Yep, very good. Jeff? You need to, there you go.
I
Thanks.
might choose to stay on mute. I guess, you know, call it a loaded question or a trap question, but I'm going to jump all over it to get slapped, I guess. I'm going to tell you 0. If you're asking about $1,525 pasture, if that'll pay for itself with what we got right now today, not a chance. Now, that said, do you have a chance to take $1,525 pasture and make it profitable? Yes, but day one, not a chance. You're going to have to be pretty innovative. You're going to have to do quite a bit of the things that have been talked about, whether it's the cross fencing, whether it's going to be the pipelines, the water lines. If it's simply a bare piece of pasture with no improvements, no enhancements, something that hasn't had any kind of soil health or grass production improvements done to it, not day one out of the chute, not a chance. If you're simply asking, well, how does that compare? You know, if it's $1,525 an acre pasture, what should I be doing? Renting or owning? On day one, you should be renting, not owning. How much pasture rent could you pay on that if all you can rent or all you can run is just a cow, make no changes to the existing piece of pasture, if it has not been enhanced? You know, $1,525 an acre pasture at 4% interest is $61 an acre. Add $3 or $4 or $5 of real estate taxes, you're paying $65 an acre rent. And that's rent. Interest and taxes are rent. So if you could walk around your neighborhood and be willing to pay $65 an acre for the best pasture around you, I bet you can rent it. and it'll probably have improved fences. It'll probably have improved grazing systems. It'll probably have improved water. You won't have to won't have to spend the time to get all those improvements. So if you're asking just that acre in and of itself, no other improved acres in your operation to help support it, I'm going to tell you zero chance of it paying for itself. But can you buy it, add it to your existing operation, or buy it, improve it over time and make it profitable? Yeah, you have a chance. So if nobody else is going to jump on that and wait to get slayed, I guess I will.
Was that a Jerry Doan question? I thought you were going to limit him.
No, it wasn't.
We're going to limit him from attacking you directly, but indirectly through a question. That's still fair game. So, Sam, if you would.
I would agree. The answer is zero, unfortunately. But I think that answer was zero for your grandpa with $75 an acre ground. And that answer was zero for your dad at $300 ground. Yet they still potentially own that property today. And that's where innovation and passion and why come into play, and profitability and networking and finding ways to say, how can I do this? How can I be more efficient, like Jeff was saying? So, unfortunately, that without our industry has turned into one that's very difficult to just go out and buy an acre without having something to subsidize that acre with, meaning another acre. And or another job or something to that effect. But unfortunately, the answer is zero.
Trish, we're back to you.
I think we're caught up on questions. I do have a question too. This is more out of curiosity, I guess, but out of the producers that you work with, on average, what would you say the percentage of income that's coming into those operations are through government payments?
So let's start with Jeff on this one. He hasn't had the honor of kicking us off on the Q&A. So Jeff, would you address it?
Trish, are you looking at gross income or net income? Because I think if we're going to talk net income, it must be 300, 400, 500% this year. And, government payments have been huge this year. And I'd like to try to look back on a more normal year and try to compare there. People are walking in this year and making payments and got money left over. And if you look for the base of that change, it's got to be government payments, because we've gone through a heck of a drought. We've gone through challenging crop prices. We've gone through a super wet time of low quality crops with a challenging price. How do we get through all of that? The government payments probably helped float us through. And so if you want to look at a percentage, these last 2 years, man, if you'd look at net income, the government payments are so many. I don't even know if 500% government payments to net income would be correct. It might be north of that yet. In a normal year, though, the studies say that it can be as much as 100%. If you look at a cattle operation, no, it's much lower. We just don't have that big of government payments in most ranching operations. So then I would tell you, if you look at net income, the government payments would be, man, if they would be 50%, probably 20% of your net income, that might be more realistic. If you talk gross income, again, challenging on sizes. There's operations that still do not believe in signing up for any government program or payment. We still have some of them, but yeah, it's all over the board, Tricia. It's this year, it darn sure floated the boat. We were expecting to see people come in and be very close to just barely making payments. Maybe we're going to be a little short of payments. And instead, this year we see people come in, they make their payments, and they're going home with money left to buy some livestock equipment or do some improvements, upgrades in the operation. Any bull sale customers out there, or bull sale producers out there, you ought to be really happy. We're coming in with a lot of money in people's hands into these bull sales times, and cow sales and everything. Government payments have been pretty big just lately. So
Okay, Jeff, thank you. Sam?
I would echo that.
Fair enough. You should get to play that card sometime. Don, anything additional on it?
Nothing additional. Can't answer it better than that.
Okay. Trish, we're back to you.
Yeah. Trish, I'd have a question. You just asked if anybody had one, if you want one.
Sure.
Go for it, Jerry.
Okay. First off, you guys, on behalf of the coalition, I really appreciate you coming on here and being honest and visiting. You guys are three of the most progressive bankers out there. And I think that for us in the coalition that's trying to educate and help producers, we really appreciate that. I think there's a bright future, a lot of optimism. I mean, challenges, like all three of you've said for young producers, but optimism. But I guess one of the biggest things I run into when I get off speaking around the country is always a young producer coming up, always wants to embrace some of these new ideas or find new ways. And then he'll say to me, but Dad won't move over, but my brother won't let me try. And how can I do that, sir? And so from a banker's perspective, and I know you guys are progressive, so it's probably, I should be talking to other bankers, but how do you work with your customers where you just can't get Dad to embrace any of these things? Again, we get back to this paradigm of doing it the same way Dad did it, Grandpa did it, great grandpa did it. So I'm curious, you guys' thoughts on how can we change that? How can we do a better job of that from your perspective, and then all of us as a whole, but from your bank's perspective?
Jeff, could we ask you to start us out on that one?
is that red button down in the right side? Is that leave deal?
No.
Is that...
No, it doesn't work that way, Jeff.
Jerry comes up with pretty challenging questions all the time. And I guess the biggest thing that I would encourage people, and it was the way that I tried to do it with my dad, Jerry. And my dad was, when he left college, he was open to new innovative ideas, went back to the operation, tried to lay those out to his dad. And he said, you know what? Dad had more German in me than I did. Thank goodness my mom wasn't full German, he said. So his mind, he said, was a little more open to change and a little less stubborn. But dad went home. He tried some of those when he took over the operation. And then what did or didn't work for him, then he hardened off on what he thought was the only way to do it. And as finances became tighter, he struggled with trying new things, because if you try something new, there's a financial risk to it. And there's a society acceptance risk to it, as we well know, different enterprises or entities that we've added to operations, whether it's downsizing the cows, whether it's adding pasture hogs or pasture chickens, somebody next to you is going to look at you and think, I think he doesn't know what he's doing anymore, so somebody's always going to challenge you. The biggest thing that I would tell the young people, if mom and dad won't embrace it and you're on the operation working day by day with them, somehow you need to get them to come to some of the pasture walks, the tours out at the Minokan farm or out at somebody's operation. I think the most powerful thing that we can do is get them to walk on the soil of somebody that is making those changes and see that it is a real person. It is really happening. Somebody is really making those changes. If all you do is read about it, I love to read an article and then throw it down and say, that's just not right. But if I'm on somebody's operation, the times that we've gotten to come out to your guys' operations, or Jay takes us into the field, I used to think when you started with those soil pits, I was just certain you wanted to get the loan officers down in there and then cover it all up. But so I was leery to just crawl down in there right away, Jay. But I think if we get the moms and dads, or whoever the mentor is or partner is that's resistant to the change or the new ideas, we've got to get them onto the soil. We've got to get them onto the operation. To simply show it in a Zoom meeting or go to a conference where you actually don't walk on the soil, you don't get to see the cattle. I had my youngest son had a chance to come with me when we did a grilling out at, and the meeting was out at Lance Gardner's, to get to stand there and see the cow size, get to see the full bags of those cows and the great grass, and how much vigor those calves had and the growth that they had, and then get to go over and see the bale grazing and how that was improving the soil or the burnout areas on his soil, was super impactful. When he got to see that, he could put together everything that I'd come home and try to be preaching and telling him about. Well, he got to see it. And it's so impressionable to get to the place and get to see it and how it works. Cover crops, my dad had to see it. He had to see how good the growth was and get to see year over year the fact that the soil was improving. To come home and tell him, as I was excited about doing multi-species planting, all he could envision is, you're planting my fields, my clean fields, to a bunch of weeds if you're going to mix everything up. So I would just say you got to get them to one of the seminars, walk on the soil, see the operations, and talk to the people.
Thanks.
Sam.
Again, that's kind of a loaded question because it's the age-old fight of old versus new. But the advice I would give to that individual producer is you got to stop being family at that point in time. And that sounds bad, but be family at the supper table, but have those times, set those meetings just like you're an operation, just like you're a business, to sit down and say, hey, wait, I'm not family right now. I'm not just your son. I want to be part of this operation, and have that conversation and a succession plan that says, okay, here's what we're doing. Let me try this small amount. Let me try this, because you can't always, you get that, oh, that wouldn't work on our ranch, Jeff. That doesn't, we got hills, that's flat land over there. That's, whatever it is, we got cricks. They don't have cricks to fight with. The cattle would be everywhere. Whatever it is, but try to eliminate that hierarchy of dad and son and be business partners, I guess, would be the advice I would give.
Okay, Sam, thank you for that. Don?
Yeah, I would add that, we're agricultural industries in the midst of a massive transference of wealth from the old generation to the new, the baby boomers to the Xers and Yers, millennials, and it's going through a major culture change kind of forced on it by the industry and just what's going on. And, you got to be patient, and you got to understand that change comes hard, especially culture change. And it comes in small pieces, and you need to be okay with that. Don't give up and keep gaining knowledge. And my second part to that would be, the banking industry also has to grow and adapt here. There's still a big chunk of the banking industry that, are set in their ways just as much as a lot of the older producers are. And that has to evolve and change as well, because the banking industry is probably the single largest partner to the egg industry. And we need to be supportive of the change and help support it and move it along and be a voice for it. But I do see it progressing, and I see it happening, and it happens more and more every year, and it's encouraging and very exciting. So.
Good. Trish, we're going to turn it back to you. You're gonna have to unmute, Trish. There you go.
Yeah, my husband was hollering at me from the other room too. I don't have any other questions posted unless somebody would like to unmute themselves and ask that question themselves.
So there's an opportunity. Anyone care to do that?
Yeah, this is Dave. With the Fed just kind of making up money as they go along here, do you see the commodity prices increasing as the value of the dollar drops, or do you see anything else happening there? I guess do you see any downfalls or good things happening out of that or not?
Hey, Don, you want to start us out?
I think currency always has an effect, and it's an effect through import to export. So there's going to be an effect. But I harken back to all the seminars I've attended from NDSU and Frayne and those guys, and it's kind of been ingrained in me that the weather patterns on the supply side of ag production worldwide really has the most material effect on crop prices. And I think if you stick to that, I think you typically don't go wrong. Watching that, because I do believe that still has the most material impact. And currency will obviously have an impact, but probably just not to the extent that the supply side world, global, a lot of that's affected by weather. So that's probably as far as I'd go answering that. I hate to try to predict anything anymore in this world where the minute you predict something, it seems like it goes the opposite way. So I know for me and in our bank, we tend to watch this kind of that global and that supply side and weather indicators across the globe to kind of figure out, where that forecast is coming in. So.
Okay. Sam, could we go to you next?
Yeah, I mean, I would say that there definitely, I think we will see some short-term gains in commodity prices if the dollar continues to devalue just because of the world market and the export market. But there's a lot of things that tie to that same deal that's going to cause you issues. Just because you have $6 corn doesn't necessarily mean that you're not going to have $800,000 combine. There's things that come in the backside that will affect you. So again, like Don said, I mean, the real price comes from what is our supply and demand. But a lower dollar is definitely going to help us increase our commodity prices. But as an old boss mine said, it might go up, it might go down, or it just might stay the same. I don't know.
Okay, Jeff, please.
A lot of things in that question, I guess. Actually, when you talk all the money thrown into the economy, the government throwing that much money into the economy should cause inflation. If it causes inflation, we got higher interest rates, we got increased input costs, gonna cause over the short term, because I don't think the economy is strong enough to sustain inflation very long. Over that short term in the near future, it's going to cause that all to come back down, unless for some reason the economy is truly so strong that it takes off. Then we'll fight a little interest rate increase. We'll fight a little inflation. You actually could see some increase in crop prices, cattle prices. We've got so many things happening that are totally changing all the principles that we've gone forward with. Whether you do or don't like Trump, the trade policies that he was changing were going to change the way that our commodity prices were getting priced. We had China using up all the commodities from around the world, such that possibly they were going to have to finally buy from us and buy at whatever price we priced it to them, which could then cause them to, if they didn't have the money to pay us, use dollars of our debt to pay down or pay for that commodity. That actually could have improved our prices. Even our American farmers could see a positive upswing in our commodity prices from it. So the trade policy was going to impact, or can impact, what our commodity prices are. We've got to get our commodity traded in order to improve the price to our people. So the money going in could cause inflation. I don't think the government program payments being paid is going to increase our commodity prices in and of itself. I think the trade policies, the uses of our commodities, whether it's through trade, whether it's through our own consumption, our ending stocks, and those things will impact our commodity prices more than anything. As quick as we like to think, well, hey, commodities are short, ending stocks are short, they're finding less corn out there than what they thought. They cut the world production by 3 point some bushels of corn. Now everything's going to go through the roof. That's great. One thing that's going to be a challenge for us in our country is our governmental cheap food policy. That works against us in agriculture. We got a government that's trying to provide cheap food to our people, and us as producers are trying like heck to get a top price. Doesn't always match itself perfectly to giving us record prices. It's more got to do with what our trade is, what our uses of the stocks are going to be. That will help bring up price. When you talk about the devaluing a dollar, yes, that helps us get rid of our extra product. That helps us trade it. That helps the foreign countries be able to afford to buy from us, and they do seek our product. It's a better product. So if they can afford to buy it, they'll buy it instead of buying from another country. So, Dave, so many things in your question there that have linked together, and yet because of the different trade policies that we've got going, and then the incoming new administration, it kind of like throws it all up in the air, and we're waiting to see where it's going to filter out to, and where going forward what things will look like. So it will be an interesting time, and darn sure been a lot of government money thrown at the system. So we'll have to see.
Well, thanks, Jeff. And lots to think about on these answers and the questions as well. So Trish, we're to you again.
I don't have any other further ones unless there's anybody else that would like to unmute themselves.
Okay, we'll give it another call for the group itself. Anyone would like to ask a question, please just go ahead and unmute and ask it. Okay. I think we're pretty close to that point, Trish.
I think so. Well, first of all, I would like to thank our three speakers this evening. I have really enjoyed it, and I've had a lot of comments coming in about how other people have enjoyed it as well. We had about 20 people on Facebook that were watching Facebook Live with us, besides the 25 we had here on Zoom. So once again, I would like to thank Jay for coming on and moderating with us. Just a couple of things that I guess I took away. I made a lot of notes, and I'm going to go back and listen to this again myself, just because I'm not maybe as distracted. But, look at the actions that you're taking. Look at your long and short-term goals, production, financial, and marketing goals, and try to cover each one of those three and not just be good at one of them. Get better before you get bigger. Know your why. Look at the whole. Get your lender on your place. Make a list of your can't do's and your won't do's. And I think that's quite ironic, because I think one of the won't do's that would have fallen onto Donnie's plate here probably, I would say 6 years ago, was that there never would have been a chicken on this place. And now we have 150 laying hens and we butcher 450 broilers every year. So those won't do's can turn into can do's. Stacking enterprises was brought up. Create an on the farm job rather than having to go off the farm, and ask yourself the questions. Jay, if you have anything to add to that, I thought there was so many good things that we took away this evening.
Yeah, I took very similar notes to yours. I thought they all three summarized, you all three complemented each other in terms of adding additional information. And I think we're real fortunate, first of all, to have you working in North Dakota, because I think Jerry was right when he said that, you're probably, on the top of the pyramid, so to speak, as far as ag lenders. And we really appreciate, your holistic thinking on it, because it brings so much to the table. So Trish, with that, you covered the summary very nicely. Appreciate that, and appreciate the invite to moderate this evening. When I looked at the panel, I said yes to Trish immediately. Didn't have to talk to me too long about that, because I was looking forward to it and hearing the interaction this evening. So thank you.
I'm just going to put a little plug in for next week. We're going to change topics a little bit on February 9th, which is Tuesday night. I see Christoph Just is on with us tonight. He will be speaking on Tuesday evening. The title of his speech is going to be Cattle and Crops Equals Our Struggles and Successes. So I'm looking forward to that. And then on Thursday evening, we have Rob Kramer joining us. So next week is two of our own mentors and producers within North Dakota that will be talking. And another little plug that I wanted to put into, one thing that has been brought up this evening multiple times is the succession of these farms and ranches. And the Grazing Lands Coalition is actually working with the National Grazing Lands Coalition to develop a session, basically, and we don't have any dates set yet, on succession planning, where we'll be working with the Extension Service and probably some other partners to put that on. And we'll be looking toward our lender partners as well to, if they have suggestions of people that, would like to be coming to those types of things. I think there is a huge need for that. And that's something that we've looked for doing here within the next year to year and a half, probably. So Jerry, do you have any final comments since I have you on here?
No, Trish, just thanks to everybody. I think it was very informative, and I really appreciate the folks that tuned in. Trish has put a lot of work into this. My hat's off to her, and it's really good to have Jay on board helping us out. So thanks to our three presenters. Again, excellent. And we look forward to working with you any way we can as a coalition to help you out with any of your needs you might have with education, or if you need mentors or folks to talk to with some of your producers, don't hesitate to reach out to Trish or any of us that do mentor and help that along, because we want to move the soil health needle forward. So thanks a lot.
Very good.
Thank you, Jerry. Thank you, Jay. And without further ado, I think we'll sign off. So thank you to everyone.
Take care.
Have a good night.
Good night.
Yeah.
Good night.
Good night.
Very good.